All right, now I want to talk a little bit about the area in the red rectangle. This is a follow-up to my prior video where I talked about the price support and resistance, which I put on this chart on Sunday evening to get ready for Monday, and this key area carried through into Tuesday. So Monday and Tuesday, April 7th and 8th, these levels were known Sunday, and they held through and pretty much caught most of the important pivots on both days. Now, getting back to the area of the red rectangle, this was on Monday, early in the morning, right after the open, right here, about 9:40, whatever it was, 9:45 or so. We had the big surge, the big strong rally up in a short period of time here. That was that tariff news surge. Okay, there was some misrepresentation on something that came out in the media, and there was another factor here. I'm not going to get into the news itself or the politics, but this was based on some reports on the tariffs. Anyway, we had the huge surge. So what happens when we get a situation like that? It is not your normal trading look, like the left piece of the chart is here and like the right daytime trading is from today over here. We generally get this sideways chopping channel overnight when we have quiet nights, which we had, last night, Monday night into Tuesday morning. But what I want to talk about is what happens when you get some kind of crazy surge in the market. You could compare this to like a Fed day news, like on a day where we have a rate cut. You're going to get this kind of crazy action at 2 o'clock to 2:30 in the afternoon on those days. But what happens after you get that? You generally move into a period of low volatility or contracting volatility. So what happens when you get this crazy surge? It's gonna blow through, quite a few price levels before it hits a resistance point. And in this case, it found that resistance point at the blue line. But what that does, it gives you this big range here. And now when you retrace after that surge, what happens? We get a push down and a push back up. And after that, what happened? That the whole trading activity for the rest of the day was bracketed inside of those 2 points. So the rest of that day, we were between that low and that high. So we, off the initial surge, we made the low here, and then the next swing high was here. The rest of the day was bound into that range. This is not an unusual occurrence. But along with that, what happened? We ended up creating a triangle here as volatility was contracting. We went into this triangular pattern, and where we broke the triangle there was right at the area of that cyan line resistance from the earlier part of the day. And what happened when that triangle broke, it went right up to the area of that prior high and then bounced around in there the rest of the day. And then as we got into the evening and we worked off that craziness, and then when we got back into the normal trading early in the morning here, when we started to pick up in volatility again, now the support and resistance was back to working like it normally does. So you can see that the market will behave differently when you have these crazy news periods or these Fed spikes or anything else that might happen that it's going to send the market into a tizzy. So what you always want to think about in times like those, when you get that high volatility, you have to think, okay, we've got this really big move in a short time. We always are going to have to burn off some time and consolidate before we can get into another move. Even today then, after we washed all this time off in this long consolidation. Even today, when we started tracking up again, we could not break out above that prior high from yesterday. We came right back to that point. We had a false break above that. We went a few points above that, and then that just turned into the big sell-off, and where you can work these support and resistance levels both ways. You can sell the reactions, you can buy the retracements, treat them as with the trend would be a prime setup, against a trend would be a scalp setup. You know, so trading long off these levels would be scalp setups. But anyhow, I just want to point out how you cannot expect your normal support and resistance to work when you have these crazy high volatility periods. What happens, you got to work that off in time to get the market price and time structure back into balance. And we did get that as we went through the night from the 7th into the 8th. And then early this morning about 7 a.m. when we broke the green and blue level and volatility picked up, we were back into normal trading again.